Get ready, crypto fans, because the news cycle is absolutely exploding and you need to know what's happening. We've got market-moving events, massive shifts, and innovations that are reshaping the entire financial landscape. From global economic signals causing wild swings to groundbreaking community projects taking root, this is your essential briefing. You won't want to miss a single second as we break down the biggest stories impacting your portfolio and the future of finance. Let's dive in. First up, we're tracking the seismic activity in the crypto market following major economic announcements. Did the latest Federal Reserve commentary send shockwaves through Bitcoin and Ethereum? We've got the full breakdown on the initial surges, the sharp corrections, and what it all means for your investments. Then, we're going deep on the forces behind the recent market turbulence. Was it a single whale making waves, or something more coordinated? We're dissecting the data that reveals the fragile illusions of market control and what it signals for Bitcoin's stability. Next, we pivot to an inspiring story of community and vision. Discover how one project is weaving Bitcoin into the fabric of daily life, fostering financial freedom and social change in a unique corner of the world. It's a powerful look at decentralized tech's real-world impact. And finally, we're analyzing the undeniable impact of institutional investment through ETFs. We'll explore the surge in inflows for both Bitcoin and Ethereum, the price action it's driving, and the critical risks investors need to be aware of. Plus, we'll touch on innovative ways businesses are integrating digital assets. Stay tuned for all this and more. Don't forget to smash that like button, subscribe for your daily dose of crypto insights, and ring that notification bell so you never miss an update. Federal Reserve's economic signals spark crypto volatility. Federal Reserve Chair Jerome Powell's recent address at the Jackson Hole Economic Symposium has ignited a firestorm of speculation regarding potential interest rate adjustments, leading to significant volatility across the cryptocurrency market. Powell's prepared remarks indicated a growing acknowledgement of downside risks to employment, suggesting the Federal Reserve might consider modifying its current restrictive monetary policy. This commentary was widely interpreted as dovish, prompting an initial surge in risk-sensitive assets, including Bitcoin and Ethereum, as investors adjusted their portfolios in anticipation of a possible September rate cut. Following Powell's speech, Ethereum experienced a remarkable ascent, reaching a new all-time high of nearly $4,954, solidifying its position as the second-largest cryptocurrency. Bitcoin also saw a substantial rally, briefly touching $124,496 before succumbing to a sharp correction. The initial optimism proved fleeting as the market experienced a swift reversal amidst renewed economic uncertainty. Bitcoin experienced a significant downturn, briefly dipping below $109,214 following the liquidation of approximately 24,000 BTC, a transaction valued at $2.7 billion, which contributed to a rapid $4,000 price drop. Similarly, Ethereum retreated from its weekend peaks, falling to around $4,405 as a wave of liquidations swept through the market, particularly affecting leveraged positions. In the 24 hours post-Powell's remarks, over $940 million in leveraged cryptocurrency positions were liquidated, with Ethereum bearing the brunt of these losses at $321.6 million, followed by Bitcoin at $261.6 million. The broader cryptocurrency market capitalization saw a considerable decline, dropping nearly 5% to $3.85 trillion, a direct consequence of the sell-offs in major digital assets. Altcoins were also significantly impacted, with notable declines observed in Solana and XRP. Analysts attribute this heightened market sensitivity to the cryptocurrency sector's reaction to macroeconomic indicators and the inherent uncertainty surrounding the Federal Reserve's future policy decisions. While some economists anticipate a potential rate cut as early as September, others believe the central bank will adopt a more cautious approach, awaiting further economic data. This divergence in expert opinion has created a challenging investment environment, with on-chain data revealing a notable rotation of capital as large holders, or whales, shift their exposure from Bitcoin to Ethereum. Ethereum is increasingly demonstrating its appeal as a preferred digital asset within the crypto market. This growing preference is supported by advancements in regulatory clarity, a surge in institutional interest, and the expanding utility of the network in areas such as tokenization and staking. On-chain analytics indicate that nearly one-third of Ethereum's total supply is currently locked in staking protocols. Furthermore, significant corporate entities have been actively accumulating Ethereum. In parallel, Ethereum exchange-traded funds, ETFs, have witnessed consistent inflows, with Fidelity's FETH fund notably leading this trend. Conversely, Bitcoin ETFs have experienced sustained outflows, with BlackRock's IBIT fund registering substantial net redemptions. This disparity in investor behavior underscores the evolving dynamics within the digital asset class and suggests a potential for Ethereum to spearhead the next phase of the bull market. Hold on tight, because the market's reaction to these economic signals is just the beginning of the story. Next, we're diving into the specific actions that triggered Bitcoin's dramatic price reversal. Bitcoin's fragile illusions shattered by whale sell-off. Bitcoin recently experienced a significant price surge, breaching the $111,000 mark, primarily driven by a dovish outlook from Federal Reserve Chair Jerome Powell and increasing institutional interest. Powell's speech at the Jackson Hole Symposium suggested a potential shift towards interest rate cuts, which typically boosts risk assets like cryptocurrencies. This sentiment fueled a rally, pushing Bitcoin's price from approximately $112,500 to $116,900, mirroring a broader positive trend in global equities and a weakening US dollar index. However, this bullish momentum was abruptly halted by a massive sell-off executed by a single large holder, often referred to as a whale, who reportedly divested 24,000 BTC, valued at over $300 million. This substantial liquidation event triggered a dramatic flash crash, causing Bitcoin's price to plunge by more than 2% in a matter of minutes, effectively erasing the gains achieved earlier. The market-wide impact of this whale sell-off was substantial. Beyond Bitcoin, other major cryptocurrencies like Ether, ETH, and various altcoins, including XRP and Dogecoin, also faced downward pressure. The broader crypto market experienced a significant downturn, with an estimated $100 billion wiped out in value within a single 24-hour period. Blockchain analysts have traced the origin of these liquidated assets to HTX, a cryptocurrency exchange, where the whale had held the majority of the Bitcoin for the past 6 years. Further analysis indicates that this whale continues to hold a considerable amount of Bitcoin, estimated at 152,874 BTC, distributed across multiple addresses. The rapid liquidation of such a large volume of assets in a market with potentially lower liquidity is believed to have exacerbated the price decline. Further insights into market sentiment are provided by options trading data. Specifically, Bitcoin options listed on Deribit have indicated a prevailing bearish sentiment among traders. The 25 delta risk reversals for various expiry dates, including December, have remained in negative territory. This metric suggests that investors are purchasing put options, which act as a hedge against price declines, at a higher premium compared to call options. The increased cost of put options reflects a growing demand for downside protection, signaling that traders are anticipating potential price drops and are actively hedging their portfolios against such risks, despite the dovish signals from the Federal Reserve. Following the flash crash, Bitcoin has entered a phase of defensive trading, with buyers actively working to maintain support at the $110,530 level. Although sellers have exerted pressure, some market analysts suggest that Bitcoin remains within its established trading range. A successful recovery above the 20-day exponential moving average, EMA, currently situated around $115,639, could indicate renewed buying interest and potentially set the stage for a retest of the $117,500 resistance level. Conversely, A failure to sustain the price above the $110,530 support could trigger a more pronounced correction, with potential targets at $105,000 or even $100,000. In contrast to Bitcoin's volatility, Ethereum has displayed relative resilience. ETH achieved a new all-time high of $4,956 before experiencing a pullback, which analysts attribute to profit-taking activities by short-term traders. The ETH-USDT trading pair is currently consolidating near its 20-day EMA of $4,349, with market participants closely monitoring for a potential upward movement towards the $5,000 mark and beyond. Meanwhile, altcoins such as XRP and Dogecoin have faced significant selling pressure. XRP appears to be forming a descending triangle pattern, while Dogecoin is struggling to maintain its price within the 21 cents to 26 cents range. The market's reaction to the large whales' actions highlights a critical ongoing discussion regarding the influence of major institutional players and significant asset holders on Bitcoin's price dynamics. Vincent Liu of Chronos Research suggests that while a single entity might initiate such a sell-off, it is more plausible that these actions are the result of coordinated efforts involving institutional participants. This perspective aligns with broader market concerns about liquidity imbalances and the potential for sustained volatility in the near future. This dramatic price action shows the power of large holders, but what happens when a community decides to build its own financial future? Get ready for an inspiring story from Costa Rica. Bitcoin Jungle, weaving financial freedom into Costa Rica's community. In the vibrant landscape of Costa Rica, a unique initiative known as Bitcoin Jungle is redefining community integration and financial sovereignty through the widespread adoption of Bitcoin. This project, detailed in an excerpt from Gabriel Kerman's new book, Bitcoin Circular Economies, serves as a compelling case study of how digital currency can foster both economic independence and positive social transformation within a local setting. Founded by Richard Scottford and Lee Salminen, Bitcoin Jungle emerged from a shared vision to embed Bitcoin into the daily lives of a community already aligned with the core principles of decentralization and conscious living. Richard Scottford, a former teacher and journalist who relocated from Hong Kong to Costa Rica, sought a more aligned and self-sufficient lifestyle. His conviction in Bitcoin's potential to cultivate a more harmonious existence was deeply influenced by his experiences in Costa Rica, particularly after participating in an ayahuasca ceremony. This spiritual journey led him to connect the concepts of Bitcoin, education, and the development of a Bitcoin-centric educational framework. This philosophical underpinning became a driving force behind the Bitcoin Jungle project, aiming to create a self-sustaining economic ecosystem powered by Bitcoin. A cornerstone of the Bitcoin Jungle initiative was the development of a specialized Bitcoin Lightning wallet. This innovative tool was designed to facilitate seamless, low-cost microtransactions, enabling residents to utilize Bitcoin for everyday purchases and local commerce. Richard and Salminen undertook the task of forking the open-source Bitcoin Beach wallet, adapting and enhancing it to meet the specific needs of the Uvita community. Their efforts received crucial support from Nicholas Birdie, co-founder of Galloy, who provided invaluable technical expertise and guidance. This collaborative development was integral to establishing a robust Bitcoin circular economy, emphasizing the critical role of community engagement and decentralized technology in achieving economic self-reliance. The Bitcoin Jungle community has expanded significantly, now encompassing a diverse network of individuals and businesses committed to reducing their dependence on traditional financial institutions. This network includes numerous yoga studios, holistic wellness centers, and other local enterprises that have actively integrated Bitcoin into their operational frameworks. The project has also garnered support from prominent figures within the global Bitcoin community, notably Jack Dorsey, co-founder of Twitter and founder of Square. Dorsey has championed the initiative, leveraging decentralized social networking protocols like Nostr to promote its visibility. The recent hosting of Nostrica, the first international Nostr conference, in Uvita further underscored the synergistic relationship between Bitcoin and decentralized communication platforms. The Bitcoin Jungle project is a key component of a larger global movement focused on establishing Bitcoin circular economies. These economies are designed to showcase Bitcoin's capacity to drive economic resilience and foster community-led development. While rooted in local contexts and driven by varied motivations, from educational advancement to financial inclusion, the success of these circular economies hinges on active community participation and the consistent use of Bitcoin as a medium of exchange. The Golden Triangle region of Costa Rica, known for attracting spiritual seekers, surfers, and nature enthusiasts, has proven to be particularly receptive to Bitcoin adoption, as many residents were already familiar with virtual currencies. As Bitcoin circular economies continue to mature, they offer a compelling alternative model for economic development, prioritizing community-driven solutions and technological innovation. The Bitcoin Jungle in Costa Rica stands as a prime example of how such initiatives can cultivate a shared sense of purpose and enhance economic resilience within a community that highly values freedom, peace, and prosperity. The expansion of these economies is further bolstered by collaborations with similar projects worldwide, including Bitcoin Beach in El Salvador and Bitcoin Ekasi in South Africa. These collaborations facilitate the exchange of knowledge and best practices, contributing to a broader understanding of Bitcoin's potential to empower local economies and champion financial sovereignty. From community-driven finance to institutional adoption, the impact of Bitcoin is undeniable. But how are ETFs shaping the future, and what risks should investors watch out for? Bitcoin and Ethereum ETFs, navigating price surges and market risks. The cryptocurrency market is currently experiencing significant price volatility, largely attributed to unprecedented inflows into Bitcoin and Ethereum exchange-traded funds, ETFs. While these institutional investments are driving substantial growth, they also introduce inherent risks that could impact the stability of these digital assets. This analysis delves into how institutional capital is reshaping the market, the dynamics of ETF inflows, and the implications for price stability, offering a guide to navigating the complex world of cryptocurrency investment. Exchange-traded funds, ETFs, have emerged as a pivotal force in the cryptocurrency sector, providing a regulated avenue for investors to gain exposure to digital assets like Bitcoin and Ethereum. These financial instruments enhance accessibility and liquidity, consequently attracting a growing number of institutional investors. The surge in ETF inflows is a direct catalyst for the recent impressive performance of these cryptocurrencies. However, a critical question remains: can this growth trajectory be sustained amidst market fluctuations? Data reveals a dramatic increase in institutional investment in both Bitcoin and Ethereum, with ETFs at the forefront of this trend. Recent reports indicate that Bitcoin ETFs recorded daily inflows amounting to $219 million, with Fidelity's FBTC and BlackRock's IBIT leading the charge. Similarly, Ethereum ETFs have attracted substantial capital, with inflows reaching $443.91 million. This robust institutional participation signals strong confidence and a readiness to allocate significant capital to these digital assets. There is a clear correlation between ETF inflows and cryptocurrency price movements. As institutional capital flows into Bitcoin and Ethereum, their prices have responded positively, with Bitcoin recovering to $110,277 and Ethereum reaching $4,423. However, this dependency on ETF inflows for price stability raises concerns regarding potential market manipulation and increased volatility, particularly if significant outflows were to occur. The market has already witnessed instances of sharp price reversals following periods of outflows, highlighting this vulnerability. While the influx of institutional capital can enhance market liquidity and mitigate short-term volatility, it also presents distinct risks. The potential for market manipulation remains a persistent concern, especially within the relatively nascent cryptocurrency market. Furthermore, the concentration of assets within a limited number of ETFs could amplify price swings. Regulatory uncertainty surrounding crypto ETFs adds another layer of complexity, requiring careful consideration by investors. Beyond direct investment, innovative applications of digital assets are emerging within the startup ecosystem. One notable trend is the adoption of cryptocurrency payroll solutions. Companies are beginning to offer salaries in cryptocurrencies, not merely as a novelty, but as a strategic move to attract tech-savvy talent and streamline financial operations, bypassing some traditional banking complexities. Utilizing stablecoins in these payroll systems allows businesses to mitigate volatility risks while simultaneously promoting financial inclusion for unbanked populations. Looking ahead, the future trajectory of Bitcoin and Ethereum is intrinsically linked to the performance of ETFs and broader institutional investment trends. An increase in market participation could drive further price appreciation, but it also heightens the risk associated with over-reliance on ETF inflows. Additionally, upcoming events such as the Bitcoin halving and planned Ethereum network upgrades are poised to significantly influence market dynamics. Investors must remain vigilant and adaptable to navigate these evolving conditions. In conclusion, the recent price surges in Bitcoin and Ethereum, fueled by ETF inflows, present considerable opportunities. However, investors must proceed with caution, fully understanding the potential risks associated with market manipulation, volatility, and evolving regulatory landscapes. Employing strategies such as investment diversification, ensuring regulatory compliance, and exploring innovative uses of digital assets like crypto payroll solutions can equip both investors and startups to effectively navigate the dynamic crypto landscape. Staying informed and agile will be paramount to achieving success in the realm of digital assets. From institutional adoption to community building, the crypto world is constantly evolving. Now, let's quickly recap the biggest stories shaping the market today. And that's a wrap on today's essential crypto updates. We saw Federal Reserve news cause major swings for Bitcoin and Ethereum, a massive whale sell-off highlight market fragility, an inspiring community project building financial freedom in Costa Rica, and the undeniable impact of ETF inflows. Stay informed, stay invested, and make sure you like this video. Subscribe to Bitcoin Bulletin for your daily crypto news, hit that notification bell, drop a comment below with your thoughts, and follow us on all our social channels for even more insights.